Afternoon, everybody. My name is Robin Birchall. I'm the CEO of Giyani Metals. Just take you quickly through the cautionary note here and compliance statement. Our assets, for those who don't know, it's in Botswana in the bottom right corner, close to all the infrastructure. It's a great country. We have a very nice project pipeline. Infrastructure is great there. Location is excellent. Specifically, our assets are very close to gaps on the main road and rail routes. We have three projects. We have the K.Hill project, we have the Lobatse project, and the Otse project. The K.Hill is the most advanced, the one that we have our resource and PEA on. Manganese applications, for those of you who don't know, it's focused on both steel and the battery market. We are focused almost entirely on the battery market. So it's one of the main metals that goes into the cathode, NMC cathode, which is probably about 70% of the market at the moment. The market has been very strong. Some of our figures are a little out of date here, but the growth has been strong. Demand is rising rapidly, and pricing is very strong. We have a little sample here of our EMM process. This is a cartoon of the process that we're going to go through. It's a fairly standard industry process. Crush, dissolve, solvent extract, and then electrowin. We have absolutely the right kind of material for doing this. It's a completely oxidized ore and is very amenable, as we've shown through the PEA and the hydromet testing that we have done so far. Just a little bit on our milestones. The company has really been focused on this only for about 2 years. In those 2 years, we've gone from essentially acquiring the licenses with no work done on them, to a resource statement, and then late last year we had the PEA released. Figures are excellent on that. I'll show you them in a second. And we've commenced now our feasibility study and ESIA. We've submitted some of our ESIA documents last week, and we have our steering committee meetings on the feasibility study running through January, February, to the end of the process in about December. Resource statement here, you can see it's a relatively small resource. It's a decent grade for making EMM. For the steel market, it's a bit on the lower side, but for us, it's an absolutely ideal chemical composition to the ore. It leaches very well, and it solvent extracts and electrowins very well as well. We will be updating this resource statement probably later this week. Not huge changes, just a little increase in the size of the overall project. We did our PEA, came out at the end of last year. The numbers are excellent. IRR of about 90%. Upfront capital of about 144 million Canadian, 107 US, with NPV about 380 million. We expect a small upgrade in that as well with the revised resource, which will be out shortly. So economics are fantastic. Our margin is about 60% at the moment. We expect to maintain at least between 50 and 60% margin going forward into the DFS. That places us at the bottom of the cost curve, ideally situated to supply the battery manufacturers as they ramp up their production over this year and next year. Work streams for this year, pretty straightforward. Feasibility study, we know what we need to do on that, as drilling for reserve, and then a bit more hydromet test work for the commercialization, kind of scaling of it. And we also have a direct shipping ore program that is specifically designed to generate the cash for us in case the equity markets remain as difficult as they have been for a little while now. And then, of course, the exploration program, depending on funds. We have 2 other projects which we've drilled in. We know the mineralization is there. We just need to go and put diamond hole drills in Lobatse and RC in Otse, and we could probably triple our resource. Strategy of the company, of course, was to prove a buildable project with good economics and then expand the resource base in our very large land tenement. You can see the kind of timelines here. Finish the feasibility back end of the year. Do the drilling kind of early middle of the year. We'd look for mine permitting early next year. It's quite a short process in Botswana, and then break ground in the sort of end of first quarter, beginning of second quarter next year. It's not a very long build, and we should hopefully be in production September of next year. We need to get to this production as fast as possible because we know that the battery manufacturers are going to step up their demand for the metal. Most of the demand for the metal comes from China, so we will be an ideal partner to purchase from. The DSO program, this generates the cash to pay for the feasibility study. We are in the contracting of that right now. We would look to be done with the mobilization sometime in around about April, and then production in May. It's a very low expense project. We will purchase a small DMS to process the material, and we'll keep that in case we want to do more in the future. In case the equity markets remain difficult, we can move some more material and fund part of our equity component of the financing of the 107 million. This is the pits that we're going to go and rehabilitate and reclaim. This is all the stockpiles at K.Hill. This is all material that was left behind. This is kind of then moving on to exploration. This is what we'd like to do in exploration. Basically, it would be define a resource at Lobatse by back end of this year and define a resource at Otse in the beginning of next year. I would hope that would triple our resource, so we could either go at the same run rate or increase the throughput and have something between 10 and 30-year mine life. These are not very complicated deposits. They're kind of akin to thermal coal, flat-lying, 3 to 4 meter seams, 30% material. Really not very difficult geology. Just a little bit on the extra drilling we'd like to do at K.Hill. That will increase the resource and hopefully come into the reserve. We have Traxys as a partner for the DSO project. They will be the marketing agent and provide us a little bit of capital as the startup of that. That brings us really to the overview, which is, look, we think we've got a very good asset. We're in an excellent jurisdiction. It's probably the best one in Africa by far. We've got a very good team that we've built over the last couple of years, excellent board. The market is a high-growth market, which is not very price-sensitive, and it's growing rapidly. And the economics, 60% margin, is excellent. Business strategy, it's mostly organic growth. We do look at acquisitions from time to time. We passed one up last year. We'll continue to look at potential acquisitions, but it's not a focus. But we would like to extend our footprint. Board, got a very good board. Maybe some of you know some of the names on there, but Mike Jones worked for 8 years in Botswana, is very well known there and has a lot of senior colleagues. Jonathan Henry, non-executive chairman, built a number of mines, very, very good non-executive chairman. And of course our management team, Wajid and Amr, just really high quality guys as well. Share price has been so-so over the last little while. Hopefully, we'll see a little bit of a pickup as we go forwards, as we go through the feasibility study. And that's it. I don't think there's any need to run through the appendices. We have some appendices if you want to take a presentation explaining a little bit about the EMM market and the work that we've previously done.